AMD stock is getting pumped pretty hard lately on YouTube. And today we're going to be talking about it. We're going to be looking at all of the numbers, not just a few, but all of them. No number gets left behind. But first, before we take a look at any statistic, we need to look at the graph, price action. Um, does it look like a good entry point right now? So let's take a look at what kind of swings this has. So as you can see from the top in November 2021, dropped down in less than a year. So from November, late November, end of November, let's say, until middle of October, 63% or more. Okay, that's a huge swing. And it was very quick as well. And then for about, so from October until March 2024, let's just say 17, 18 months, we have a rally of 270%. Just try to understand the type of company this is. This is a very, very cyclical company in the semiconductor industry. So you have swings like up 200, 300%, down 60% or so. Yeah, this was 64. Here it's almost 60. And then it's rallied to 200%. And now, what should we do now? What does it look like? Well, it looks like you definitely missed most of the opportunity in AMD stock. So is it possible that this keeps on rallying? Yeah, sure it can go a little bit higher. But yeah, let's take a look at the market cap for AMD and get into the numbers. So $350 billion. Can it go up to 500 and then start to crash 50, 60%? Yeah, sure it can. Can it go to 600 billion and then come crashing down to about 200 billion or less? Of course it can. So this company is huge right now, and it does not pay a dividend. And you'll see further that also it does pretty much nothing in terms of buybacks. But yeah, 4P pretty big here. But when it comes to very cyclical companies, you don't really want to take a look at earnings. They can fluctuate a lot, and we're going to take a look at that as well. So let's get into financials. Top line revenue growth. Let's see what's going on here. This company was eating a lot of market share from Intel. So after 2018, it started to grow a lot and accelerate the growth. Why? Because it was taking pretty much all of the important market cap from Intel. Started with consumer chips and then moved on to take market cap from the data center chips. And yeah, it also in 2020 and 22, they were selling a lot of GPUs, video cards, to people who wanted to mine crypto. So there was a glut. And also, yeah, I mean, 2020 people were getting free money from the government. They were sitting inside their homes and playing video games. So the demand for gaming chips and video cards and everything that AMD was offering was very high. And also, I think 2021 to about 2022, they acquired Xilinx. So you see here a huge bump in top line revenue, but not all of it is natural growth. This is a merger as well happening here. So keep that in mind. Let's take a look by quarterly, see what type of cyclicality is there. So it got pumped a lot in the top line revenue during these years, 2020, 2022, and then it flatlined, dropped a little bit, flatlined until 2024, and then here we go again, another cycle. And this one is obviously pretty big again. They have huge demand for pretty much all type of their chips, and a little bit for their custom AI chips as well. But we're gonna talk a little bit later about that. Next thing we want to take a look at is shares outstanding. Are they still diluting? They were diluting pretty heavily because they needed the money for R&D and growing their operations. After Lisa Su came in as CEO, she changed a lot of things, trying to repair the company, and they needed a lot of capital to do so. So they were diluting. Here, the huge increase in share count is from the Xilinx operation, but it continued to dilute, mostly because of the huge stock-based compensation. Next, let's take a look at margins. Gross margins for AMD is 51%. They were rising, and it looks like it stabilized a bit. Again, dropped a bit because of the merger. I don't remember exactly what type of margins Xilinx had. They were pretty good, but maybe lower than 50% gross margins. Now, operating margins, this is ugly to see. They were doing fine, growing, especially 2020, 2021. A lot of demand for their product, they were able to charge more money for it, even though they were in a fierce competition against Nvidia. They were still printing money as everyone else in the semiconductor industry. But then margins came crashing down, and this is not pretty to see. Yeah, it's not. And even 2024 and trailing 12 months, this is the end of 2025, and it's not looking good at all. Nvidia pretty much eats all of the market share from, I would say the problem that AMD has is that their chips are not competitive enough. So they pay a lot of money to TSMC to produce those kind of chips, and they have to cut prices to compete with Nvidia. If they want market share against Nvidia, they have to cut their prices drastically, because nobody is just going to put, even if the chip is cheaper, even if the GPU and the processor is cheaper, they're not going to put it in for the next couple of years, because it might just become redundant in less than 12 months. So the data centers, hyperscalers, and everyone who uses these kind of AI chips, they don't want to put the second best. That's why Nvidia can charge whatever they want, and everyone buys their chips immediately, and they can't make enough of that stuff. And just for reference, okay, let's take a look at the margins of Nvidia, so you have a little bit of comparison here. So 51% compared to 70. This is already, Nvidia is already looking like more like a software as a service and not a chip designer. Okay, 70% for anything in the semiconductor industry is huge. You have only Synopsys and Cadence, which are software providers that have over 80%. But this is operating margin 58%. Extremely, I mean, some financial companies have over 58%, not this. This has profit margins, free cash flow, everything, 41, 53, 58. Okay, let's go back to AMD. Take a look at it again. Oh, where are we? Jesus Christ. What's going on? Oh, yeah. Back to the income statement. 51% compared to 70, 9% compared to 58 or whatever it was, 60%. Profit margin 10 and 17 compared to like 50 and 40. So this is, yeah. Nvidia is pretty much crushing everyone, but not just Nvidia is crushing AMD, the other hyperscalers as well. They want to reduce their reliance on Nvidia chips because they cost so much. And that's a huge problem for AMD because the hyperscalers are not like, hey, AMD, come on, guys, make some better chips so we can buy them. No, they said, okay, we're going to make our own chips. We're going to design them and fab them at TSMC as well. And we don't have to pay you. So that's a huge problem for AMD. Let's take a look at the balance sheet. $4.8 billion, same as it was back in 2022. This is very good to see, but not amazing, not anything. This is not exciting for a company that's worth 350 billion. Yes, they have some money for R&D investments and maybe some buybacks, but 5 billion, even if they buy back tomorrow, next day, for $5 billion worth of stock, they wouldn't be able to do much. I mean, it's almost nothing compared to the market cap. Total assets, this jumped by a lot after the Xilinx merger. Long-term debt, they don't have much debt if at all. So net cash is positive, so 3.3 billion. So let's take a few notes here. So first of all, margins very low for a fabless semiconductor company. People think, oh, if you're fabless, you're just swimming in cash and you're printing money. That's not the case. So first, second, no dividends or buybacks. And we're gonna take a look at buybacks next. And then 3.3 billion is good, but not for the market cap. So net income 3.3 billion, and stock-based compensation. Look at this. With the Xilinx merger, it went up a lot, but this is even before the merger. So 2022, they ramped up to the stock-based compensation, and now they're sitting at $1.5 billion in stock-based compensation, which is huge. SBC is massive and toxic. Toxic because, I mean, look at this. Last year, 2024, they did 1.4 billion in SBC, and the net income is 1.6 billion. I mean, was that 2023? They were doing 1.3, 1.4. Net income less, much less than that. 850 million. This is really toxic, and you don't want to own this like it is right now. It's not going to be good for you. Let's take a look at repurchases. They were doing a bit. They had a lot of cash in 2021, 2022, but now after the release of ChatGPT and the demand of AI chips skyrocketing, they need to put a lot more money into R&D and stuff like that. They cannot pour the money into buybacks. So they are doing buybacks only to cover the SBC. So again, no dividends or buybacks for a company that's worth 350 billion. That's not very good. Let's take a look at Nvidia. Even though Nvidia is massive, it's right now it sits at let's see, $4.6 trillion. Even at this market cap, they are able to retract a lot of the share count. Well, not a lot, but a lot more than AMD, because they are doing zero. So look at this, 40 billion in 2024, and they did trailing 12 months 51 billion. After they release Q4 earnings, maybe this jumps to like a 70 billion or so. But anyway, these numbers are huge. Okay, 40 billion, 50 billion. If the market cap of Nvidia is around 5 trillion, then they did around 1% in share count reduction. So let's see here at the shares outstanding, shares change. Trailing 12 months, they did over 1%. Last year, over 0.5%. So they're not diluting, and they offer a little bit of value to the shareholders. Okay, they're swimming in cash. They don't need to reinvest that much. Let's go back to AMD. Cash flow. Let's see here. What else is there? Free cash flow. So what can we see here? 2020, they were starting to do much better when the demand skyrocketed, and 2021, this was the year when they were printing money. 2022 as well. So 3.2 billion, 3.1, and then what happened? It crashed back down to 1 billion, which is not bad, going from 2019 slightly free cash flow positive to up to 700 million. They had a very nice period here, and then 1 billion. But what can we learn from this? Is that the FCF is very cyclical and unreliable, okay? Which is very typical for the semiconductor industry, especially for the guys that sit at the bottom of the stack. So you're looking at this number, 5.5 billion, and saying, oh, wow, this is just going to continue to grow forever because this time is different. No, it's not different. And the demand is going to drop at some point. We don't know when, but for sure, in a cyclical type of industry, it's just going to, we don't know for sure when, next year or 2027, but sometime this will be coming down a lot. And then you're going to see your stock dropping by 50, 60% or more, depending on how overpriced it was. So the more it overshoots to the upside, the harder it's going to crash. So as you can see here, it shot up pretty by a lot. I mean, it doubled from 2020, starting in 2020. Oh no, that a lot more. So they were around 50 billion starting in 2020, went up to about 200 billion, which is nice gains. Extremely good gains on the stock price, of course. But then it came crashing down. So you want to be buying low. You want to invest in the semiconductor industry, you need to be very aware of these cycles, okay? So investing right now in AMD, you lost the boat. I mean, it's too late. It's just too late. It was already at 166. It's more than doubled since then. Yes, you can make some money. Yes, you can make 25, 30%, 35% maybe. But if you don't know when exactly you have to get out, when to get out, if you're not very precise with your exit, then it can cost you. That 30% gain, it can quickly turn into like 10%, and then you're holding, and then the stock keeps dropping, and then your gains have already been dead money for you, and you underperformed. You could have made money in something else. So again, Ford P, 38%, pretty huge. It can go down to 20%, 27. Let's take a look by quarterly to see how low can this go actually. 15. So this can drop a lot. When it drops like a rock. Even in March, it dropped from 4P of 50 down to like 22. So yeah, I mean, it had a 60% almost drop in value. So right now, as you can see, it's climbing in valuation. It has multiple expansion. It's not like, oh, AMD is earning a lot more each quarter. No, it's just multiple expansion. Let's take a look at EV to EBITDA. So bottom in 2022, around 19, then multiple expansion, went up to 60, 70, then dropped again to 27 times, and now we're sitting at around 57, which is, again, fantasy is pretty much, valuation is at fantasy level. Return on capital invested, 3%. This is pathetic. After the Xilinx merger, I mean, they can barely cover their cost of capital. This is not good. I mean, yeah, sure, they're gonna recover, but it looks like it's not gonna be that quick, and that's very slow, moving very slow. Right now it looks like a mess, but at least it's positive. At least they're not burning money on their capital invested, which is nice. But I mean, they're not gonna compound anytime soon at these levels. 3%. I mean, you need at least 10% or more to start really compounding. FCF yield 1.5%. Again, these price levels are pretty much insane. But yeah, we need to take a note about. Let's just take a look at Nvidia just for reference. What are they doing? ROIC. So for every dollar reinvested, they get 1.6 back. That's Nvidia, 66% return on capital. That's kind of crazy. 70%. I mean, yeah, the demand is very hot for their chips, and they can ask for whatever they want to, and people are gonna pay the price. You don't want to be competing against Nvidia. You're just gonna get your margins crushed. That's just the reality of the situation. So I see a lot of people trying to justify, oh no, Nvidia is already like 4 or 5 trillion. You're not gonna be able to make a lot of gains, and they're right. You're very limited in gains. Looking forward for this stock, but just because you're limited in gains, you shouldn't be. Just because you missed the boat in Nvidia and you're not able to make money investing right now in Nvidia, you shouldn't be looking elsewhere in the competitors of it that are not doing that well, that don't have the margins, that have ridiculous stock-based compensation, and they're doing buybacks only to cover that SBC. Let's take a look at Nvidia. So 6 billion in stock-based compensation, but their net income is 100 billion. So they can cover this very comfortably and pour tens of billions of dollars into buybacks and actually reduce the float by 1% or more for this. I mean, this is the most valued company in the world, and they are able to do more than 1% in buybacks. This is extremely good. Very good. Very well. So yeah, that was pretty much it. AMD is pretty much a trading stock. It's not like an investment. If you buy it, if you buy high, if you buy when it goes up, let's say you didn't really buy at the top, you bought here over 21% over 2 years, that's not good. I mean, the S&P 500 did around 20% this year, and last 2024 it did more than 20%. So you underperformed even if you bought in 2021 around the top. I mean, let's say you bought the dip here at 137. You made 56% over this period. That's not very good. Again, you underperformed massively. Not that you underperformed, but you also took a lot of swings. I mean, your volatility in the portfolio would have been insane over this period. I mean, 60% drop, 200% gain, 300, then another 60% drop. This is a stock you want to be trading, not investing. You need to be buying at the low when everyone is scared and fearful, and then ride the wave up and take profits. Take profits along the way. Okay, take profits here at plus 80%, plus 90%. Take some profits here when it goes vertical for sure. You can even close down the position and move to something else, find something else. And yeah, that's pretty much what you need to do in order to get smooth gains and have some real alpha over the S&P 500, not just a little bit of outperformance. Is AMD stock going to outperform the S&P? Yeah, sure. Over this period, last 5 years, it's 134, which is more than S&P. As you can see here, it outperformed massively, but you have to be careful. If you bought here, you did not outperform the S&P. So you need to buy low. You can outperform the S&P 500 by a lot, but you need to be buying low. That's the whole point.